Hi everyone, I'm Shannon Manders and I'm GTR's Editorial Director. I'm going to be guiding you through this next discussion on commodities and commodity financing in East Africa. Now, economies in pre-pandemic East Africa were some of the fastest growing on the African continent. This year, however, the region's commodities and agribusiness have faced plummeting demand caused by COVID-19 together with other factors. At GTR, we've been following these developments as well as other commodity stories breaking elsewhere in the world, and they are hands down our most read stories on the GTR website. So during this discussion, we're going to be looking at some of the key themes that have been dominating the commodity finance space in East Africa over the last year, and looking at what we can expect as we close out 2020 and move into 2021. We're also going to be taking a look at whether or not market developments playing out in this sector elsewhere in the world are set to have a material impact on this region in particular. And let me start off by introducing our fantastic lineup of speakers. So joining me on the panel are Zhann Meyer, who's the head of agricultural commodities at Nedbank CIB. We have Sachin Jain, who's the Chief Financial Officer for Kenya, Uganda, Rwanda, Burundi, and Ethiopia at ETG. We have Prosper Nambaya, who's the Director of Corporate Banking of CRDB Bank. And we have Dheerie Govender, who's the CEO of Global Collateral Control, GCC. Welcome, gentlemen. Thank you so much for joining us. So we have four topics or trends that I'd like to touch on over the course of the next sort of 14 minutes. The first of which is the headline grabbing trend around the commodity finance banking retrenchments, which nobody, I'm sure, has missed. So over the last few months, we've seen a handful of international banks retrenching from commodity finance activities following exposure to fraudulent activity, a historic crash in oil prices, as well as a slowdown caused by COVID-19. Now, Zhann, perhaps I can start with you. To what extent do you think that this impending exodus of lenders will impact Africa's and East Africa in particular's commodity finance markets?
Shannon, thank you. We've certainly done a lot of work on this because it obviously impacts on our banking environment as well. I think the Hin Leong fraud, the Phoenix frauds, and a number of other mishaps in the trade and commodity finance arena, and the subsequent exit then of BNP and ABN AMRO, SocGen partially exiting and focusing on very select clients. Rabobank is relooking their portfolio. It has an effect not only in the region, but on the continent as well. And I think the effect is not going to only be the exit of liquidity into the trade finance commodity market. It's going to have an impact on pricing as well. Supply and demand, even for cash and facilities, will dictate that cost of funding will go up. And I think the traders need to be cognizant of this when they enter into lending arrangements. I think that the new normal is quite possibly going to be an environment where their debt is going to be more expensive, and that will have an impact on their cost models. So yeah, I think looking forward, there's a liquidity gap in this industry, especially on the African continent. And the large international banks are moving back to safety. Africa is largely seen as a risky environment, and that creates opportunities for us as local African banks. But also from that perspective, there is going to be an issue in terms of availability of liquidity.
Thanks, Zhann. And Sachin, what are your thoughts from an ETG perspective?
Yeah, so I think we have been quite fortunate. Thanks for having me here, Shannon, first of all. I think we, as ETG, I think we have been very fortunate, and I think a pandemic has not hit us as such. And I think in some of the business, in fact, it has affected us positively. So I think I would like to put two perspectives here, one from the bank's perspective or the lender's perspective, and one obviously from our perspective. So I think bank's perspective, if I see, and as rightly mentioned by Jain, that I think banks will look for more risk optimization, which is very fair for them to secure their books. They're going to have more securities, ask for more collaterals from the clients, okay? which is going to make the entire process of getting credit little more cumbersome, but on the same time little more secure from the bank's perspective. And then from the client's perspective, or from ETG or the industry perspective, I think we have seen 3-4 major changes which are going to be there, and I think in fact which has been there. Number one is to the customer, or to the end customer also. I think industry is trying to go for a cash sale or the less risky proposition while selling. Equity or the strategic investors are also going to play a very, very important role in the entire industry growth. Okay, and obviously banks will continue to be a great partner, but then these things are going to play an important role. And I think credit worthiness, as well as the transparency with the banks as an industry, I think that will pay back to industry in a long run, and I think that's where the future lies. So.
Thanks, Sachin. Dheerie, I'd like to bring you into the discussion now. What are the conversations that you're having with your clients on the back of what's been happening sort of across the market globally?
Good morning, Shannon, and thank you for having me. I think from our perspective, there's a negative and a positive. The negative is that this type of current situation in terms of fraud and being perpetrated in the industry does not bode well for the collateral management sector, primarily speaking if it extends to sort of some sort of collaboration or collusion between the collateral management company and the trader. That's certainly a negative for us. The positive for us, the discussions we're having are related more to how do we have to change our processes and upgrade our systems to meet with the new demands or the new requirements as such that the banks and financial institutions would be imposing to more effectively control goods and, like Zhann mentioned, documents as well.
Thanks, Dheerie. Prosper, coming to you, from where you're sitting in Tanzania today, how are you viewing these, these global banks retrenching from the market, and who's feeling the most impact as a result of that?
Who feels the most impact? For me, I think it's small and medium enterprises, because the switching cost is huge. And then looking on the big clients, the cost is huge, but it's a bit affordable to them. What we have seen in terms of costs, it increased the cost to borrowers, because as much as you have more international and local banks and many international financial institutions, the better to the borrowers or the clients to speak. So when you see, even if one or two leaving the region, they bring instability. That's why I think even in the past few months, we have seen within East Africa, government interference within the financial markets just to bring instability because of lack of liquidity of some sort, etc. But for me as a banker, and the way I've seen in recent past, this also have some positives in terms of forming strategic partnerships. And these strategic partnerships are not only within the local environment, but it's also within the international space, where we have seen the level of confidence also goes down in terms of international suppliers and buyers of commodities. That brings also the confirmation of trade finance instruments. So we also need to come to the readjustment in such a way that you find strategic partners that can confirm your financial instrument in terms of trade, so that the flow of commodities can continue within the region. In the meantime, I think I can say that.
Thanks, Prosper. Zhann, coming back to you just very briefly, do you think that African banks are, looking at what's been happening with these global banks and maybe taking a moment to for some sort of introspection and reflection? And do you think that there might be lessons to learn for bankers across the world within this industry on the back of what's happened?
This reflection goes to everyone. And we as bankers, we have done our homework as well. For example, we come to a point where we watch our liquidity very closely in terms of looking what's happening within the region. So it's now the time to reflect even the way we process we process clients' requirements in terms of commodity importation and exportation. So we also review our processes where we see a lot of automation as well to cut costs, some sort of that. So this is reflection to everyone, and then it also comes with the new norms. Like now we are doing this virtual conference. We have done a lot of automation in terms of reaching clients without them coming to branches. And then also the key part is to deal with the commodities. So we have had also financial instruments in terms of trade that clients don't need to come to the bank to do their export or importation requirements, but rather scan their documents, send through the specific file to the bank, and then we process. So it's a time that we also reflect on our policies, procedures, as well as looking forward how to sustain on that challenges.
Yeah, thanks, Prosper. And then taking that question to you, Zhann, would you agree from a South African banker's perspective that there are lessons potentially to be learned?
Shannon, we would be very stupid not to learn lessons out of this. I think it's a big opportunity for all the local banks as well as some of the regional banks to do very, very deep introspection in terms of the control environments. And I think more importantly, the clients that we deal with, you know, and the onboarding processes of these clients, how well do we really know these clients? And as Prosper rightly mentioned, I think there will be a deep dive into, unfortunately, the smaller traders in the area. They're going to find it difficult to find liquidity. And that goes hand in hand with the international banks still operating in this area, not necessarily looking to Africa as the destination of choice. And then maybe going back to safety, you know, to home, to Europe, where they understand the processes, they understand the controls, and they can travel more easily too. I think that's the other thing that we need to take into account is we can't go and visit our clients. So relationships here is critical. You don't want to look over the shoulder of your clients, and if you know your client and you trust him implicitly, I think that makes it so much easier to do business on the continent.
Sachin, if I can come back to you very briefly. So we talked about some of the sort of more negative trends affecting the industry, but what are some of the more positive trends that we've seen over the last few months in terms of the ways that banks have been, you know, working together to implement support packages and measures in light of the pandemic? I know that ETG has worked on something very recently with Afreximbank, if I'm not mistaken.
Yeah, so I think, thanks, Shannon. I would like to answer your first question. I think the entire banking industry was customer obsessed. Okay, so I'm sorry to use the word, there are multiple bankers here, but I think there is a new thrust on the processes, and really the industry who is consolidating during the pandemic. I think there is a more thrust within the industry as well. So I think banks are respecting the companies, or banks are basically giving more weightage to the companies who are using various risk mitigation mechanism, or they are using digitization, or they are using various technologies to sort of control their inventory, control their debtors, or mitigate the various other risks. So I think that's a one good trend, and I think as an ETG we kind of support that. On a specific question on Afrexim, I think there have been developments. I think, and I think let me also put across some few facts before I come to this entire deal or something. Africa spent approximately $90 billion on importing the food items, okay, from various parts of the world, in spite of having the 60% arable land or the available arable land across the world. Okay, so this is a kind of an irony with Africa. And also, if you see, kind of 50% of Africa's agriculture production is kind of lost during the process from the farm to fork. This is lost. So I think ETG has been a pioneer in this field, and I think we have been working in many kind of processes, consolidating, working to give best quality inputs to the farmers, and also collecting the outputs from them at a good prices. So I think we are kind of supporting the farmers in that entire process. And obviously this AfriExim deal will obviously give us more weight or help us to increase our footprints and help the farmers to the next level.
Thanks, Sachin. I want to move to the second trend that we're planning to discuss today, and that's supply chain disruption. So obviously with COVID-19 lockdown measures being implemented across the continent, there's been a limited amount of flow of goods. So my question to you, and Dheerie, perhaps I'll start with you. How has East Africa fared in terms of the impact on specific countries and commodity sectors? And feel free to talk about your footprint across the rest of Africa as well.
Thanks, Shannon. I think let me start with Southern Africa, where we were quite prominent. And of course, as South Africa, we were one of the first countries on the continent to go to a level 5 lockdown. And then East and West Africa had followed suit thereafter, and of course, country by country. So from a commodity perspective, we have essential and non-essential goods. And I think all non-essentials were immediately stopped. With port closures being effected across the continent to sort of contain the flow of people and flow of goods, followed by the fact that essential goods like fuel and certain strategic and commodities that were allowed to be either imported or exported. But at level 5, from a South African perspective, with the port being closed, there was a major disruption. That of course had a knock-on effect to vehicles that were stuck at the different border posts, or even in the port itself. Huge congestion that we find up to today has not really been alleviated. And I think going forward, we're going to take some time to see everything come back to some kind of normality pre-COVID. And hopefully in time, I guess we'd have to change certain systems as well to how we operate and what we bring and what we move in and out.
Thanks, Dheerie. Prosper, perhaps I'll come to you for your observations. Knowing, I think that, if I'm not mistaken, Tanzania did not go into an entire lockdown as perhaps some of its neighbors. And how has that impacted the country's ability to trade within the continent and with external trade partners? And perhaps you could talk about some of your neighboring countries as well.
For me, I think I can put this into perspective in terms of hard and soft commodities. When I look on our portfolio, being the biggest bank in the country, we have been heavily affected because we did not have 100% lockdown. People continued working, but the relationship around us in terms of regional and international affect us big time. When we looked on our key clients, these are big, huge clients with experience for years exporting gold, and the key markets here, the likes of Dubai, etc. Those countries were in total lockdown. You have the likes of Diamond, where you can only sell in Antwerp, in Belgium. It was locked down, I think, for a month or so. And then when it opened up, people were not ready to go there. So you find those mining companies with huge expenses, they have stock, but nowhere to be sold. So we as a bank, we have to get in between and then providing working capital for the clients who are the basis for the Forex inflows of Forex for the bank. So that disrupted the whole liquidity ratio in terms of Forex. And then when you look on soft commodities, the likes of agriculture, we have a full-fledged agricultural department within a CRDB bank. It was also affected. The likes of commercial crops, the likes of cotton, the likes of tea, horticulture, these were hugely affected. We have the biggest market in terms of Eastern and Central Africa is in Kenya, where Mombasa is the second tea auction market just after Sri Lanka. It was locked down. When it was opened up, there was a challenge. Even now, Kenya is starting open up slowly, but people have got huge stock of tea where they can't transport to Kenya. So you find a client coming to the bank with a stock of over $5 million, nowhere to to sell like in the past. So those actually disrupted a lot in terms of commodity trading. We have the likes of horticulture, where the major market is in Europe, which also got huge effect in terms of that. Looking on that, I also see that you have countries that were 100% experiencing lockdown, the likes of Kenya, Uganda, Rwanda, etc. Then you have Tanzania that people continue working in terms of the agri sector producing. So my feeling is that in the short term, we can see maybe countries that managed to produce during the pandemic will be able also to support in terms of selling key food products or key raw materials to our neighboring countries. In the meantime, Sharon, I think that's what I can share with the team and yourselves for now.
Yeah, thanks, Prosper. Very interesting, very insightful. Thank you. Sachin, coming to you, what new ways of doing business have companies like ETG been forced to adopt as a result of all of these essential lockdown measures?
Yeah, so I think just to touch upon what Dheerie and I think Prosper has told, I think theoretically lockdown was open, but I think in some of the areas I think it has been opened, but I think still industry is yet to get a respite from this, because I think practically there are many places or many situations where goods are stuck up, many borders goods are stuck up, drivers are being checked, it is taking a lot of time. So I think it's not a free flow, and I think industry will again take a lot of time to cope up with this thing. Now on coming to the new technologies or new ways of doing business, I think ETG has even before this pandemic started, ETG has realized that the way ahead for the industries to go direct to the customers, and I think we are increasing our direct presence in the market. We are going in every nook and corner of these countries. I think although we have a very decent presence, but I think we are increasing that presence. We are ensuring direct deliveries to the customers. We are using again our e-commerce arm, which we have started around a year back for various deliveries also, and I think to have that connection with the customer. So I think we have been doing good in spite of this entire pandemic thing.
Thanks, Sachin. Zhann, you wanted to add something from your perspective.
Yeah, Shannon, I can't agree with Sachin more. You know, we tend to see, and a lot of people think about agriculture as it was essential services. You know, the impact was minimal. COVID doesn't touch agriculture because people's got to eat. I think that's largely true, but there's a major flaw in that argument in terms of just the supply of these goods and also the demand. So the logistical cut downs and the issues that we had at the ports was an issue. And I think furthermore, what we've seen in East Africa is that a lot of the tourism related activities and consumption patterns was severely disrupted. We had to restructure a lot of our clients' offtake contracts. We had to restructure and actually lengthen offtake periods purely because stock wasn't moving. You know, the wheat was sitting in silos. It hasn't been milled because people wasn't consuming bread as readily as it was in the past. So from that perspective, I think the challenges was slightly less than the rest of the industry, but obviously severely impacted by the fact that demand was basically cut to zero at some stage.
Yeah, thanks, Zhann. Dheerie, coming back to you, I'm interested to learn from a collateral management perspective. So, you know, being unable to travel to warehouses, are financiers now more reliant on third-party verifications? And what does that mean for banks' compliance processes throughout this?
Yeah, Shannon, I think from our perspective, we're lucky in the sense that we've got an established setup in most of the countries we operate in, from physical offices that are fully staffed. So the only restriction for us had been with borders locked, that we could not go in ourselves as an additional check on our local staff. So we have inspectors in the warehouses, we have a supervisor that controls all of that. So all of that in country could be done, but the third-party audit from head office, from South Africa or from any other kind of external auditor from South Africa couldn't be done. So we had to employ services of local auditors as well. Also at additional costs, coupled with all the other COVID costs that we had to undertake. But I think going forward, as Zhann touched earlier as well, travel limitations are going to place more reliance on companies like us to give more detailed information. And like I said, that from a technology perspective, that's something that we are currently looking into and seeing how we can meet those requirements of the financiers. The only other thing I wanted to mention as well, we spoke about the agri and we spoke about the minerals. Of course, we've seen a world market crash in fuel, you know, and with people limiting their movement, that had an adverse effect on the fuel industry as well. So I don't know how some of the financiers are dealing with that as well, coupled with everything else.
Thanks, Dheerie. Yeah, I guess the other thing that I just wanted to touch on very briefly with regards to East Africa, I mean, certainly the fuel issue is one factor. COVID is another, but separately, East Africa's agri-commodities have also had the misfortune of being struck by locusts and floods over almost the same period as this pandemic. Zhann, maybe I'll start with you. What's your take on the extent of the damage caused by those events and the timing thereof?
And I think the locust plague specifically was well managed by government specifically. The other thing that also, you know, caused the fact that this disruption or the damage wasn't that dramatic as we originally thought was the fact that the planting and growing season in East Africa is well, it ranges from March to December. These locusts came into being a real threat and obviously becoming very prevalent in January, February. So at that time, most of the crops, especially in Kenya, has been taken off the lands already. So I think from that perspective, the locust timing was for them bad, for us obviously good. But I think where the impact is going to be is on protein, especially meat prices. You know, there are vast tracts of pasture land in Somalia, Uganda, and in Kenya that's been devastated. So in terms of the red meat production, you know, you're going to see a rise in meat prices purely because the pasture land is at peril. And obviously from that perspective, people are going to have have an issue in terms of supply of red meat in the industry. And I see that's mainly where the problem is going to be. Now, having said that, I think very careful monitoring going forward is going to be required from the governments. The FAO is spending $70 million in the region on aerial spraying programs. But, you know, the crops are at this point in time maturing. So we need to be very careful of it, just making sure we keep our eyes on the locust plague and just make sure it's well controlled.
Sachin, coming to you, has this been a massive factor in your guys' business as well?
Yeah, so I think we have kind of seen that this is one of the kind of 40-year situation. I think certain weather stations have seen that the floods were kind of highest in last 40 years. Okay. Then if I see from the number of people who were impacted because of these floods, approximately 1.3 million people within this area of East Africa, they were affected because of these floods. Around 480,000 people were kind of displaced because of these floods. So I think this was a major impact on the economy as well as the livelihood of the farmers. And then coming to the locust situation, I think because of this high rain season and obviously because of this flood, this has helped the locust to breed more, and I think that has led to the problem worsen. But I think that has been kind of controlled pretty well. Okay, I think we estimated that this could have gone worse, but I think it's still not at that stage, and I think it was controlled pretty well. So I think we should be quite comfortable as of now.
Excellent. Prosper, did you have anything to add from a Tanzanian perspective on that point?
To be honest, I think we do thank God that the locust issue that was big issue in our neighboring countries did not have that impact in Tanzania. But the main impact that we see in Tanzania, it's in floods. And I can put that into two perspectives, starting with our commercial farming. We as a bank, like I said, we have a strong agricultural department where we finance and support key commercial crops like the likes of tea, tobacco, cotton, cashew nuts, etc. So we see some parts of the country experience the floods. And then clients took facilities from the banks knowing that as normal, they will have normal harvests and then continue servicing their debts. So we had to come to a situation where we granted more grace period, we restructured facilities just because the floods were too much in parts of the areas. You see clients have to apply fertilizers once or twice, unlike in the past that when they apply fertilizers, they were taken with floods. And then even part of the farms, you see the cane farm, half of the farm has been destroyed. So that was huge impact in terms of commercial farming. When we come into food crops, there was huge risk in terms of food sustainability. We saw the likes of national food reserves increasing storage and then accumulating enough reserves, assuming that whenever there's shortage, then there are some procedures to make sure that people get well fed. Those two, I think, are the ones that we had the impact, but like I said, in terms of locust, we were a bit safe.
Yeah, I'm pleased to hear that. Thanks, Prosper. So let's move on to our third trend. We've still got two more to cover in the next sort of 10 odd minutes, so we'll move quickly through these. The first one is commodity pricing and demand. So pandemic-related disruption have sort of exposed Africa's overdependence on high commodity prices and exports of raw materials. But what, Zhann, maybe I'll start with you. What local and global demand and pricing trends do you think we're likely to see play out across commodity sectors over the next year? I know this is high time to be asking people for their predictions in this incredible period of uncertainty, but give it a whirl.
Yeah, thanks, Shannon. I think I'm not going to try and play economists here. They say that the definition of a really good economist is he doesn't need to be right. He just needs to be sure why he was wrong. So from that perspective, yeah, I'm optimistic about commodity prices. I think the world has done well in terms of maintaining our food security. The issue is just, and again, I think it's important, and I think Sachin raised it, that especially in East Africa, the importation of foodstuffs to me is just an issue that needs to be very carefully monitored. And from that perspective, self-sustainability is critical for the region. And I think there are, steps being taken by government to make sure that there's emphasis on that. And statistics shows us, the percentage of imports, of total imports, just food and agricultural stuff in Ethiopia is 20.3%. That's a percentage of food and agriculture versus total imports. Equally worrying, Kenya, 16.8%, sitting with massive arable land, with deep and fertile soils. So to come back to you about the pricing, I think pricing in East Africa is going to be an issue for some time. We've seen prices rise of staple commodities, and that needs to be managed until the situation normalizes. But generally, I think on a global basis, especially agricultural commodity prices are fairly stable. And I'm not going to go into detail about sugar and those type of things because that's a totally different dynamic. But I think generally we're fortunate in terms of there's enough food globally to make sure we don't see massive spikes in prices in general.
Excellent, Zhann. Sachin, did you have any thoughts to add?
Yeah, so I think I would like to quote one very small sentence, and I think that will, and I will further try to elaborate in Africa context. Small is not beautiful, but unproductive. Okay, so it's not always good to be small, and I think that is a reality behind many of the Africa problems. Okay, there are no economies of scale, if you see, and I think that's where ETG is trying to contribute in many of these countries. We are bringing the agri input. We are trying to educate the farmers about the right sort of the agri input they have to use, right? Sort of the agrochemicals they have to use. And then we are using the digital channels to reach out to the customers or to the farmers to educate them regarding that. So I think, and in terms of the commodity prices, I think I would like to agree to Jain, and I think it's a short-term phenomena, and I think 2020 should not be like this. We hope so.
Thanks, Sachin. Dheerie, did you have a view on commodity pricing and what we might expect to see throughout the rest of the year?
Yeah, I think both Zhann and Sachin have touched on exactly that. However, with the countries producing an accumulation of stock in certain countries with certain markets not yet being fully open, we could see some variation, but I don't think it will be quite substantial, specifically on the agri side. Like I said, the fuel side and mineral side did take a little bit of a knock, but it would take some time to adjust accordingly.
Thanks, Dheerie. And Prosper, what are your thoughts on this topic?
My thoughts are very simple. Back to the basics is that we have seen some countries producing in Africa, especially in Eastern Africa, and then some parts of the region were not producing. So my feeling is that we can see food pricing increasing, especially demand from those countries which had lockdowns. And then in terms of international commodity, in terms of these food commodities that are commercial, the likes of tea, cotton, horticulture, I can see in the meantime from now, prices start getting up. I'm not a predictor, but I can see that things now, countries are opening up. The gold market is now coming back. The diamond market, the horticulture market, the tea, cotton, countries are opening up. So my feeling is that price will gradually go up. And then I've also experienced that because cotton, the bales, it went down to around 40 cents, 47, 50 cents, but now it's around 60 cents per kilogram in terms of USD pricing for cotton in the global markets. For me, that I think is the key. But to solve the problem in the future, maybe like Sachin put it very well, is very experienced in terms of ETG. African countries, we need to start now adding value to our raw commodities and to reduce dependence on world markets, because we export raw. When the price falls, everything falls apart. But when we come to a point where we add value, however small it is, then we come to the stability. Thanks.
Yeah, that certainly seems to be the age-old problem. Now, we have just a few minutes left in this session, but I really want to tackle one more trend just very briefly, and that's digitization. So we know that tech-enabled innovations have come to the fore in trade finance, so in traditional trade finance instruments since the start of the pandemic. But what have we seen in terms of commodity finance specifically over the recent past and in East Africa, and perhaps as a result of COVID-19? Sachin, maybe I'll start with you.
Yeah, thanks, Shannon. I think this is one subject which is very close to my heart, and being a CFO, I think this is the one of the role I am playing with ETG, and I think I'm very happy that we could do many things in last few years or last few time. So I think we, especially in this pandemic scenario, if we keep in mind, I think the working remotely or to have access over your warehouses remotely, to have automation in warehousing, to have your right controls within the warehouse, inward and outward movements, and it's going to be very, very important. From the trade finance perspective, if I may touch upon, although the technology has not evolved as much as it should be, but I think the uses of blockchain is going to change the way we do the entire trade financing. Okay, and I think that's where the future lies. Now, coming to more on a transactional side, I think, and where I think we have been working very, very, very much with our farmers, and and I think I have touched upon in previous session also that we are trying to remove the middleman from the entire supply chain, and I think that's where we are trying to bring. We have launched ETG app very recently, and I think that has been very successful, and I think we are trying to educate farmers that, okay, please go to our app, and then maybe you can get multiple information from that app itself. Then I think on a soil testing or the crop diseases and all these things also we are currently working, and I think it should be in place very soon, where farmers can kind of interact with us on these issues, and we can try to educate them that yes, that's where they can improve their productivity, which kind of soil it is, and which kind of inputs you need to use in that, so that they don't waste their money into by putting the wrong inputs. And that's where I think the agriculture productivity and farmer income is going to further enhance. We are also working on various sales apps wherein our people can kind of go and visit the customer or to the farmers, and they have a geotagging within the app, and we can understand, okay, what is actually happening on the ground. I think that's where we are trying to go. We are also planning to understand the impact of blockchain into our industry, because I think that's where the future lies, especially on a commodities which we are exporting. So I think that's where ETG is working on these digitization things very aggressively, and I will not be surprised if next 1 year or 2 years you can see a very different industry structure within this East Africa region.
Thanks, Sachin. Zhann, coming to you. What's the coolest digitization initiative that you've seen coming out of the commodity finance industry over the recent past?
I'm not too sure about cool. It was almost necessitated, Shannon. I think from a banking perspective, obviously the frauds that was perpetrated made us look very carefully about how can we automate some of these processes. Double discounting of invoices, authenticity of bills of lading. I think there's a deep dive into what technology can bring for us in terms of making sure that those things doesn't happen again to banks in general. But I think what also is going to happen in the region, and what the governments have seen in East Africa is that, and this is a COVID-related thing, is that the vulnerability of the agricultural supply chain in terms of food security is real. And what we've seen is that, and it's an ongoing process, but I think it's been exacerbated and almost accelerated at the moment, is that government is getting involved in terms of assisting with technology in terms of farming, sustainable practices, soil degradation is being attended to, artificial intelligence and drone technology is being used by certainly private sector. Government's getting involved in that. So for me, I think one of the things that I certainly would like to mention in the region, and I would like to commend, the adoption of this technology, is Monsanto partially monitored and sponsored water efficient maize for Africa. It's their WEMA program. And these strains are going to go commercial in the region, in Ethiopia, Uganda, Tanzania, and Kenya in 2023. And that was really a long way towards food sustainability in the region, to adopt these technologies. And yes, it's controversial. GMO is not everybody's favorite, but I think we need to think about how we bring technology into agriculture to enable food security in the region.
Thanks, Zhann. I mean, some of that sounded pretty cool to me. Dheerie, let's come to you for your thoughts in terms of the logistics and operations. What have been some of the most interesting, most relevant digitization initiatives for you?
Yeah, thanks, Shannon. As the gentlemen, Sachin and Zhann, discussed, I think digitization is on two fronts. One, from a documentation perspective, but in the arena of structured trade finance, the goods don't just sit. There's a constant movement of goods. So the digitization from a logistics perspective is something new that we've seen come out fairly recently, and supported by a fairly prominent businessman now in South Africa, is almost an e-hailing service for transport. It'll be nice to see how that sort of progresses and develops in this part of the world, and I'm sure that's something that will extend to the rest of the continent as well. So like you are calling an Uber, I think there's a database created for a variety of transporters who then offer their services on a hailing basis and quote accordingly and price accordingly.
Thanks, Dheerie. And because we're pretty much out of time, Prosper, you have the good fortune of having the final word on this topic. What are your thoughts?
I think for me, I have two. In Tanzania, I've seen our Tanzanian mercantile exchange, which has tried to be more digital, where clients, buyers and sellers can exchange information online, unlike in the past where people used to travel physical. If we do more of that, I think it's very strong, because you can be in the capital city, but you can have access to all districts across Tanzania, across the region, even to speak, and you know where exactly what product is found, what commodity at what price, and then you can have instant trade finance digital exchanges, and then you can have values online. I think that's very strong for me. And then second one and last one, I think, is to automate the CMA, collateral managers, who normally get their reports, send them manual, and then they scan, send to the bank. But you can have a system where I've seen 1 or 2 firms now trying to see if it's possible. If you are financing a cotton player, a Gina, let's say based 100 kilometers away, immediately after they weigh down their commodities, you can see where you are from your laptop, and then you can give value from that, and then you can have quick trade finance solutions out of that, whether it's invoice discounting, purchasing order financing, etc. So those 2 are key for me, and then I've witnessed those 2 processes now starting getting into motion in Tanzania.
Thank you, Prosper, and excuse me, thank you to you all for your contributions. I think this has been an interesting and certainly an optimistic discussion that we've been having over the course of the last 45 minutes. So thanks very much for your time, a virtual handshake and round of applause to you all. And that's it from us. Thanks.